Hello guys, this is Pedram Raufi and you are watching the markets review, and during this program we are going to go through the different assets from the stock market, Forex market, and of course the cryptocurrency market as well. We're going to check the charts, daily charts, 15-minute charts, and for day traders as well. We are going to find some solutions for trading. Happy New Year, and actually about the new year and the news background which this year is actually bringing us, we are going to talk about as well. And the most important one about which I wanted to talk with you and about which I wanted to tell you, as you know, was the surge of the record surge of S&P 500, the United States stock market index record surge, which happened from the first days of this new year. And as you know, as you remember, we actually told you from previous times, from previous programs, that the price of the stock market indexes are going to rise and rise further, despite the fear which exists about the Federal Reserve System interest hiking, which could happen in the near future. Despite all of these facts. And the most important reason which was the trigger of this surge actually was the higher capitalization of the Apple company, $2-3 trillion, which releases of which we just got during this week. And what can you say about this optimism? How the index looks, how the chart of the index looks actually. And we are going to check the Dow Jones Industrial Index as well. Mainly, they kind of break through the maximums, but the situation which could we have in the future would be the continuation of a really moderate upward movement. If the amplitude, if the volatility remains like this and won't get higher, and if we won't get any kind of widening of volatility near to the local maximums, near which we are now located, if anything like this happens, the continuation of moderate upward movement would be the most realistic scenario. But in the other way, if we get any kind of higher volatility, if we get any kind of volatility widening, like for example on the Dow Jones index, as we see, we had some signs of a really short-term divergence, which happen especially when we have some surge, immediate surge in the volatility near to local maximums or minimums. Now we are actually located above local maximums, around the local maximums, S&P 500 and Dow Jones as well. So maybe in the midterm and for next year, as analysts told us, the rising of prices of the indexes of stock market indexes won't be so sharp. They're mostly gonna be moderate, and mostly we could have some downward trend. But for now, for today, we are going to look through the 4-hour chart for some midterm analysis of Dow Jones and S&P 500 as well. And the situation which we have here is actually the widening of volatility. Unfortunately, it's the widening of volatility, but it gives us in the nearest future, in the short term, it would give us some probability of a really fast surging of the price, a fast hiking of the price, and some upward impulses maybe. So for S&P 500, 4,900, 4,850 won't be so actually difficult to take over. And for Dow Jones, unfortunately, here we have some signals of volatility a widening and divergence. But anyway, here as well we have some chances of some impulsive upward surge, impulsive upward movements which could happen. But in the midterm, as you know, the situation which is here, the situation which we have on the 4-hour scale chart and for S&P 500 and for Dow Jones is showing us that the probability of the next reversal in the midterm is higher. So in the midterm, we are waiting for this reversal, but in short term, the continuation of a moderate upward movement would be more realistic. And for day traders, impulsive upward movements would be as well really possible. Let's see the dollar index and how it's behaving because it has a opposite correlation with the stock market, as you know, because of the inflation and the other things. Here the consolidational movement of dollar actually continues in the 15-minute chart for day traders. I'm sorry. For day traders, maybe here we have some signals of probability of downward impulse, but mostly due to the higher scale chart, for example, due to the 4-hour chart, we actually located above some resistance which we couldn't break through during past 10 or 11, 15 days. And due to this fact, maybe we could continue. Maybe the dollar's upward movement could continue, but just look at this amplitude, which is getting lower. Look at this volatility, which is getting lower. And always, if you pay attention on the larger scale time frames, if we break them with an impulse and then get something like this, you get some formation, candle formation like this, which shows us that the volatility is getting lower after an impulsive breakthrough of a local maximum or local minimum. In this case, is a local maximum, is a resistance, local resistance. In these cases, the probability of next reversal is higher. And if we look through the daily chart, we actually could see that today's candle opened higher than yesterday's candle. So even if we have some probability of a reversal in a midterm, due to the short-term chart, which we have here, maybe we could get a volatility widening here. It means that we could get retest 96.40, 96.60, and if we get retest this resistance with an impulse, with an abnormal candle, this could actually make prices to reverse faster. But if we get a moderate upward movement here, this could mean that maybe the upward movement could remain on the dollars market. Do you have any fundamental factors for dollars next upward movement, for dollars upward movement continuous? Yes, we have, but it's a really midterm factors. For example, the factor about the higher Federal Reserve System interest rate, which is going to get higher from this year. And as you know, even due to this factor, even due to the factor of the interest rate hiking, there's a real high optimism about the stock market rising continuance because of the earnings of companies and the other things. And even due to the interest rate hiking, we cannot say that S&P 500 Dow Jones are going to make some really heavily downward movement. So anything which would be downward for S&P 500 and Dow Jones could be upward for US dollar. But this correction of S&P 500 and for Dow Jones, which we are waiting for, would happen during some time, would happen during some maybe weeks, and maybe it won't be that deep as we think. For day traders and for today's calendar, let's see what we have and what we got already. We had an German unemployment change, which was positive, and we had the manufacturing. We have manufacturing PMI of United States, which is not going to be so optimistic. And of course, from United States at 3 o'clock by GMT by Greenwich time, ISM manufacturing PMI, which is not going to be really optimistic as well, and JOLTS job opening, which is a little bit better. And as you know, the optimism of job markets in the United States would really make the Federal Reserve System to tell more about the hiking of the interest rates. So the only thing that could make Federal Reserve System to rise the interest rates is the better situation on the job market. And if we are actually saying that the situation on the job market is getting better, it would mean that in the nearest future, on the FOMC meetings or on the Federal Reserve System meetings, we could hear about the tightening of monetary policy. So here, this factor could be really good for dollar, and not so good for S&P 500 for indexes. So we actually can imagine that maybe during today's sessions we could get some reversal on the S&P 500 and on Dow Jones, and of course dollar indexes could really continue some upward impulsive movement, which would end in the near future as well. But due to the situation which we have here, the probability of reversal, really short-term reversal for stock market is higher, but the dollar index is going to rise anyway, even due to that impulse which we had. Even if we take in account that impulse which we had, dollar indexes in the midterm, in the short term, is more bullish than bearish. So let's go through the Forex pairs which we always check. The main Forex pairs like Euro, Pound, Australian dollar, and New Zealand dollar to United States dollar. Euro dollar, as we see in the 15-minute chart, in the short scale chart for day trading, looks like that the consolidational movement is continuing, and the range is about 200 points, a really low range, but for day traders, it could be really good. We have some impulsive movements, which is making us getting near to the local resistance, and this could be not a really bad chance for short-term sellers, for short-term bears to return to the market. So maybe after the impulsive retest of this level, and if the candles get stuck under this level, under 1.1310 or 1.1315, the continuance of downward movement in the near future would be higher. So the reversal of euro depends on the dollar's hiking, and yet we have dollars consolidation. The euro is going to rise, and here 1.1315, 1.1310 is the next levels that we are going to retest. GBP USD had a really sharp impulse due to previous hours, and due to the higher scale charts, maybe we are going to have some strengthening in the midterm for GBP, but just pay attention that the probability of the retest of local support of 1.3450, 1.34 is not that low. So we have some probability of a retest of these levels, and maybe this could happen after the drawback, after the reversal from 1.3520, 1.3510. So 1.3520, 1.3510 are the levels from which we could reverse in near future, but we are going to retest them anyway, and the probability of dollars upward movement continuance, despite the situation which we have on the stock market, despite the optimism which continues on the stock market, is more realistic, is a more realistic scenario. So here we actually could say that maybe this movement of pound and of euro during next sessions would end and would actually cause some upward impulse, upward retest of local resistance, and the next reversal. So what is going on with Australian dollar and New Zealand dollar? As we see here, for Australian dollar in 15-minute chart and for New Zealand dollar in 15-minute charts, we have some push to the local resistance, and maybe this impulsive movement which we have could cause some upward continuation of upward movement. But here as well, there is a real high probability of divergence, even here, even near to the bottom of the market. So about both of these situations, for Australian dollar and New Zealand dollar, we have to pay attention that we have a mirror level actually about 0.7220, 0.7220, 0.7215, and this range which we have here, which we have upper, because of its impulsive retest, could really become a range of a reversal. After the retest of which we could get reversal. So here the probability of next downward movement would be higher during next sessions, a reversal. So we could get some reversal due to the Australian dollar chart and New Zealand dollar chart. Of course, we could get some reversal as well. But for midterm, maybe the continuation of upward movement would be more realistic. But for short term, we are going to retest the local resistance here as well, really impulsively. So due to the range of 0.68, the retest of 0.68 and 0.6805 maybe, due to the retest of this range, you could tell where is the price heading next. So if we retest this range impulsively, it would mean that we are going to get reversal movement or the continuation of the consolidational movement which we have now. But if we moderately get pushed to these levels, it could mean that dollar would get weaker. And just pay attention that during next weeks, maybe this optimism which we have on the stock market could actually finish, won't continue. So due to all of these factors, maybe during this week even, we could get some reversal of stock market, which could help dollar index to go higher, to hike, and all of these pairs to reverse down. So maybe here is the last chances for bulls today, tomorrow, and next days to just use this bullish market which we have here, which is really speculative, really speculative, and we have to really be careful with it. Let's check the commodity prices. As you know, commodity prices get higher when we have some risk factor on the stock market. But nowadays, there's no risk factor. Even the spreading of Omicron, of new mutated virus, does not make market to scare it, because we have the progress in vaccination, and even the other mutation which nowadays are happening in French and the other countries, and the mutation of the collaboration of the coronavirus with the flu, which we had in some countries, are not that horrible for stock market. The stock market had to have the other reasons to make the deep correction, but we know that the Omicron and the virus is not the main trigger nowadays for gold. And the situation which we have on the gold chart, due to the 15-minute chart, we have some bottom which we retested, and we are getting higher above this bottom. And I'm sorry, that's silver. Now for gold, it's gonna be actually exactly the same. So we have a bottom above which we are getting strengthened. So 1,800 is the main level after the strengthening above or stocking under, which we always say that price is going to go higher or is going to go lower. So if we have some strengthening above this level, this is really good. But due to the amplitude which we have here, due to the volatility which is really shrink, we cannot say that gold is going to continue the upward movement. And especially if we are going to get any impulsive movement, probability of which is really high in the near future, the next reversal and the continuation of downward movement would be realistic and more higher. So due to the daily chart, maybe due to the low scale chart like 15-minute chart or 4-hour chart, maybe we have some signals of upward impulse, of a bullish impulse. So you can use it during next days which are coming. But you have to actually pay attention that the amplitude above this level, above this main level of 1,800 is really low. So the continuation of upward movement here is under question. It's really questionable. And the main thing that we can say is that we are looking for the continuance of downward movement. So bears can actually wait a little bit. Bulls have some potential for run, and this potential is about 1,810, 1,815. And as impulsive is this movement, the probability of the movement reversal, of the tendential reversal would be higher. So don't forget that the situation on the gold chart, and of course on the silver chart, it's kind of the same. Look at this amazing retest of the mirror level of 23, and as you see, we are stuck under this level, and we have some bottom which is retesting, but I don't believe that we are going to strengthen above the 2280. 2280 is a level which is already actually ruined, and mainly we are going to break it downwards in the future, but just wait for some upward impulses to happen. So here for intradays, for day traders, maybe it would be a really good speculative probability for use the market impulsive upward movement which could happen, and just really fastly get out of it. 23 is a level which could get retested, but I think that 22.95 would be more realistic for retest. An impulsive retest of this range would mean that we are going to go deeper, go lower in next days, during next days. United States dollar to franc and United States dollar to Japanese yen is showing us some signals of divergence. And US dollar to the franc, there is no divergence here. Here actually the continuation of upward movement is more logical, but just pay attention that maybe here actually would be a really good, we could actually got a really good momentum here. We could get a really impulsive breakthrough of 0.9170, 0.9160 even, 0.9170, 0.9160. But after this retest, after this impulsive downward movement, the main thing that you can actually beat on is the reversal. So the main thing that you can actually be sure about is the reversal, because this level, this range is kind of a mirror range, mirror level. So, and because of this, we are waiting for this downward impulse. As you know, we are waiting for the upward impulse of Euro, Pound, Australian dollar, New Zealand dollar against United States dollar. And of course, the downward impulse of United States dollar to franc or to Japanese yen is for near future is more logical. And we could get it, but after this downward impulse, the speculative traders, scalpers, day traders, maybe they need to just get out of market if they are bearish about dollar, because the next thing that could happen is a really moderate continuation of upward movement, or the consolidational movement, which won't even give dollar to go lower. So just pay attention to these factors. Stock market is on the highest points. The optimism which analysts actually predicted about the market, it have to finish in near future. It really has to finish in the near future. So due to all of these factors, you actually have to be really careful with these impulsive movements which you could have in the near future. These impulsive movements are really great, or really speculative, or really good for day traders and for the fulfilling of day trading, of intraday positions and trades. But you have to get out of them at the moment, at a good time. I mean, so the divergence on USD JPY, as I said, and the downward movement which could happen here, the potential 115.60, and how impulsive, as impulsive would be this downward movement, the probability of next reversal would be higher. So the impulsiveness of this movement is really important. The impulsiveness of this movement would show us this impulsiveness of downward movement, and the retest of 115.60, 115.50 would show us that prices are maybe going to start some moderate upward move, moderate strengthening, or some consolidational movement next. But the probability of downward movement in the near future is higher than anything. So let's see what's going on with oil market, with WTI prices and United States dollar to Canadian dollar. As we see here, oil prices from previous time, we had some divergence, and we had some widening of the volatility, which actually gave us the signal of a reversal. But this reversal is not so powerful. This reversal is not so powerful. As you know, as we said, the downward reversal of oil prices for now, for today, is just a correction, because the oil prices they are going to continue the upward movement. The energy crisis hasn't finished. We have some global warming, but as you know, the prices of energy, the prices of oil, and oil companies, shares of oil companies are the winners of previous year, and the next year they could be the winners as well. So due to the 4-hour chart, technically due to the daily chart, the 4-hour chart is actually, we can show it better. We have some probability of a nearest upward impulsive movement. We have some probability of the upward impulsive movement, and which could happen after this consolidation. And 77, 76, 50 are the levels which we could get retest as well. But in the case of something like this, in the case of this kind of upward movement, the scenario of dollars strengthening would cancel. The scenario of dollars strengthening would cancel. So would oil prices in the near future continue to rise? Would they or not? If we return to 15-minute chart, we could see a really, really powerful resistance which we have around 76.40 or 76.50. Let's say 76.40 and 76.50, okay? And near this resistance, we have a really powerful power of bears. We're actually retesting these levels, and we are kind of returning from it. But this pushing of volatility to this range could really mean that we could have some upward impulses. And this upward impulse could really, in the near future, if it happens, it would make dollar to go a little bit lower, but the continuation of dollar indexes rising in midterm is higher than oil. The oil market could remain in this downward, moderate consolidational or moderate downward or consolidational movement in the near future. The probability of it remaining in this phase is more than anything for oil market. But for dollar, the continuation of upward movement is actually kind of higher. Despite the situation which we have today, despite the situation of this weakening of today's market, of dollar market, which is actually related to the stock market record high renewings. And the US dollar to Canadian dollar as well. Here we have some chances of the retest of local support. 1.27, 1.27 are the best levels which could get retested. And this range is actually a risk range. Bulls have to use this range to put some limit orders and start the buys in the future. Because as we know, in the near future, in the midterm future, the probability of stock market reversal is higher. And as well, the oil prices will continue and will remain in this consolidational phase. We don't have any news or news background or fundamental factor for oil to continue the upward movement in the near future, despite the energy crisis problem. And for US dollar to Canadian dollar situation could be reversal in midterm, but in short term we are waiting for the retest of this local support. Let's go through the main cryptocurrencies and let's see what happened from previous times. Previous time actually prices were retesting 5,000 and 50,000. If you remember, we told you that the probability of the continuation of upward movement is not really high because we had some widening of volatility here, and we had at the time we had the problem of the shrinking of the candle's body, which actually made prices to return to the lows. And would prices go lower in the near future? Unfortunately, or not so unfortunately, here we have some convergence signal which could help prices to return again, but it's a really a kind of short term convergence which we have here, which is between an RSI indicator and with minimums. So this convergence could maybe help prices to make some upward impulses during next sessions, next days, but mainly in the future, I don't think that we are going to get strengthened above 50,000. So the next dumping from 48, 49,000, the probability of next price dumping from this resistance of 48,000, 49,000 is really higher than the continuation of the strengthening above 50,000. But we are looking through the short-term, nearest future continuation of upward movement because of this convergence which we got here, and the start of the movement is really, as we see, not really volatile, which could mean that this upward movement is moderate, and if it's moderate, it would continue. So let's say the technical factors are pro the continuation of upward movement of Bitcoin, but don't forget that every time for buyers we could have some risks, and the speculative downward movement here could continue or could start as well. The opening of today's candle is really under the previous ones, and it's kind of showing us that the probability of today's session, tomorrow's session, downward impulsive speculative movement is high as well. So you have to actually choose your risk for buys in the near future. If you are going to buy due to this moderate upward movement, due to this moderate strengthening of the price, you have to choose a logical risk range for your buys and for your long positions. And Ethereum, what is going on with Ethereum? Strengthening here is kind of optimistic as well, but what is telling us the 4-hour chart? The convergence here doesn't exist. Unfortunately, it doesn't exist, but 3,900, 4,000 are the levels from which we are going to dump again. Pay attention that we could retest them impulsively, but we are going to dump from them again. And mainly, before we get strengthened above 3,900 or 3,800 at least, the continuation of upward movement would be under question, would be really questionable. So we're waiting for the first, we're waiting for some retest of 4,000, which would actually make us to go lower. But during some days, the probability of strengthening above 3,800 is high. So we are going to just wait for the price to get higher and get above 3,800. 3,800. It's not such a bad level. It's actually really good level. 3,800, and the strengthening above this level really could help Ethereum to continue the upward movement. Next, after the strengthening above this level, we should see if the amplitude is continuing to be normal, if the amplitude is not going to get lower. Because if the amplitude gets lower, or if we get an impulsive retest with one abnormal candle in the H4, in a 4-hour chart, to the resistance of 4,000, it would really mean that we are going to dump deeper. So all of these technical factors you have to pay attention on. If you see any sharp movement between 3,800, 4,000, you have to leave the market as a bull. You have to just take what you have and leave it. So we are waiting for some strengthening above this level. If we have some impulsive movement here, if we get above this level and the amplitude is really low, the probability of next dumping is really high. Next speculative dumping, actually, because the prices are getting ready for some midterm reversal, as I can see due to the price charts of Bitcoin and Ethereum. Thank you guys that you watched our video. Don't forget that we have different instruments on our platform which you can use as a risk manager and the algorithm maker, which can help you to fulfill your trading better and more professional. Don't forget to check our website and use our sell-off on our different materials, on our different courses. And don't forget to subscribe on the channel and ring the bell so you won't miss anything or any video in the future. Thank you again and have the best tradings. Till next time, bye bye.